All right, I got my eyes all over the place. Cool. So I can see the chat. All right. So welcome to GamePlan Sunday. Today is November 8, 2020. Had a pretty electrifying week, I must say, with the election here. I guess the election allegedly behind us here. We can start to strategize on how to move forward. Now, that's a pretty interesting statement there because as we all know, the election is still kind of up in the air. All right. But we're going to make our hypothesis based off of, what's going on with the consensus here, basically. OK, so basically, we had the election pop off, as you guys already know. They're projecting that Biden had won the election. Now, we actually went live on the day of the election. So shout out to all you guys who actually showed up. We did go live and we were taking a look at the markets live during the election to see, how the markets was feeling about everything. And it was a pretty cool experience. So definitely look forward to some feedback, from you guys on that if we'll do it again. But what was interesting is that going into this thing, right, if you guys can remember, the whole talk track was that if Trump loses, the markets is going to crash. Okay, very interesting hypothesis there. Even Trump himself was saying, hey, you like this guy, market is going to crash. But what we end up discovering is that the markets did not crash. In fact, the markets actually rallied, crazy strong. In fact, I was looking at some data from every election, and every election besides the one for FDR and the 1930s, Franklin Delano Roosevelt, this election here was like the best election week for the stock market. Okay. And if you guys don't know anything about FDR, he's the guy who ushered in the welfare state. Okay. So all the welfare stuff, you had a lot of, when a lot of blacks were voting Republican switch over to the Democratic side, and it's because of this welfare spending stuff. So if you take a look at the charts, you can see that FDR, the stock market was going crazy because all of the intervention. And so now, allegedly that we have this Biden victory. This is the second best week ever in the market history, based off of hopes of this Biden victory here. Now, I don't know if Trump has any tricks up his sleeves to get out of this. Lots of speculation about that. Haven't seen any hard evidence on that. That would be very interesting if he does. In fact, it would be catastrophic on the markets. Okay, so just keep that in the back of your mind as a risk parameter going into this week, or I guess going into these next few weeks, because I guess he's rolling out litigations, having a bunch of attorneys, lawsuits, or what have you. Really depending on, if he can flip it, I mean, that will be crazy. But as of right now, the media, everybody's pretty much claiming Biden. So the key thing is to start to prepare for a Biden admin. In fact, I think Biden's going to be announcing some of his admin and stuff like that this week, a coronavirus task force and all of that. And so I think that, just taking it from that hypothesis, and we still keep in mind that Trump could, overthrow this the way that Al Gore, the whole Bush and Al Gore situation did, where, again, he claimed victory for 36 days and they got flipped on him. Right. So that could happen here, but I don't know. It's a bunch of speculation. But if that was to happen, it'd be crazy on the markets. But what we actually did see in the markets is that the markets did not crash. The markets rallied. OK, super strong week. And, the funny thing is that, in the markets, you got to kind of go opposite of what the crowd is doing. Right. Because, the wisdom in the markets was like, oh, hell no, I'm getting out of here. It's going to be the craziest volatility in the world. Everybody was expecting the volatility. In fact, where the hell was the VIX? The VIX was sleep, taking a nap. Like, what happened to the VIX? VIX fell off the cliff. Everybody was buying up calls in the VIX, getting ready for it, right? And it never showed up. It never happened. In fact, the markets ended up doing the total opposite, right? The markets going crazy high. And so it was interesting. The markets don't really give a damn. The only thing the markets want is that stimulus. And so what you guys have to understand is, and again, we wrote, let me actually go over here real quick to the blogs. You can see the blogs over here. I'm gonna just go here. Try to write some articles, give you guys some wisdom without, you know, breaking your neck. You know me, I keep it all the way G. So when I go into doing research and writings and stuff like that, really good writings that we have out here. But you see this article here that we wrote about how to use asset ownership as your savings account. This is a really, really awesome article. Okay. Really awesome article because it's showing you the way, you know, it's showing you the way of money. You got to understand that it's about asset ownership. So click on this article, check it out. But basically, if you don't own assets, then you will not be the winner. Okay. And the assets will be, you know, amplified by the medicine of the Federal Reserve and the federal government. Okay. They're going to be pumping all kind of stimulus in this thing, inflating assets. Okay. Now, this is the whole reason why we have this whole wealth gap. For those that don't know, you have to go and check out the other writings here. See if I can get that out. All right. So yeah, so you'll have to go in and take a look at these other writings that I wrote here to educate, okay, about income inequality. Like, where does this stem from? You got to really understand these things, okay? So you don't own any assets, you're not going to benefit from it. You're just going to, I guess, have the bragging rights that the guy that you was saying is going to win is going to win. But how are you going to make money in a Biden administration? How are you going to make money in a Trump administration? Capitalist state of mind first. This is what we always have been doing. We'll always do. So hope you guys are here to get that, because either way, whether it's Trump, whether it's Biden, we're going to do what we do. We're going to get this money. You feel me? So hopefully you guys got the same mindset. That's where we at with this here. But lots of wisdom to learn, lots of things to learn here. But we did have fun. I must say, we stayed up. I was projected to go not too long. I think we stayed up to what, 12 o'clock at night or so? I can't even remember because I didn't even go to sleep till about 2 or something. But we had a pretty good night. You know, shout out to you guys for showing up. It was pretty cool. Okay, so with the election still kind of in the air, but the markets is actually pricing in the whole Biden, you know, victory. And we're just going to move off of that hypothesis that Biden has got it, although that could flip. What, you know, that we know that we did also have, you know, we'll make our speculations based off of a Biden admin. How are we going to make money in this environment? Now, taking a look at the data that we had that came out this past week, we did have the ISM numbers, the manufacturing PMI numbers here. Take a look. Registered 59.3%. All you need to know is that if it's above 50%, then that is a sign of recovery. That means expansion. Okay. So expansion we're seeing in the manufacturing sector, excuse me. It says the manufacturing economy continued its recovery in October. And so what I like to do is actually go over, I like to capture some of the surveys from these guys in the industries. I captured some of the surveys so you guys can hear from them directly in different industries. But you can see COVID-19 continues to have an effect on supplier support and operations, more from a decreased labor perspective rather than unavailable material. Okay, so that's computing electronics products. Business continues to be robust. Sales are greater than expectations and cost pressures are modest. There's posturing by suppliers on market price increases for corrugated and polypropylene, yet no firm price increases at this time. We expect a strong finish to 2020 and a solid start in 2020. This is chemical products. Transportation sales continues to be strong. Increased production due to store stockings up from the second wave of COVID-19. Pretty much, we're seeing that things are looking good, basically. You guys can gather that here, right? So manufacturing is pretty much looking good. Again, this is on the website, which is a huge source, huge resource for you guys. Again, you got your Facebooks out there, and you got your, you know, your Twitter and all that stuff. A lot of that stuff is garbage. Okay, it's a lot of garbage out there. I even get involved with it. I get into debates and things like that because it's entertaining and what have you. But you know, you can learn from a lot of it. But Wall Street Jack Boys is pure value. When you come here, pure value all over the website. Nothing but value. Now we get it popping in the chat room. So you see a little chat bubble down here at the bottom. We get it popping, straight value in there too. But when we're live, man, we're a team, man. So we're going to have fun. You get into here and you get into the chat room and you can see we get it in, right? So we go in, we're calling out the plays all through the day, every day. So shout out to you guys that's participating. If you haven't participated, make sure you get involved. Okay. So it's here. Free resources. Most of these platforms charge $200-$300 a month for you to get access to a chat room like this. But I actually own this whole platform, and we got all kind of resources. So anyway, check that out. Another thing here that I did is that from the past week, I did drop this debate in on the website. If you haven't checked it out, make sure you check it out so you guys can understand, what the experts on economics are saying about the economy. There's a nice debate here, lots to learn, different perspectives of, where we go from here. Where do we go from here as a society? Okay. So we're going to be talking about that. There's talks of a secession right now. I mean, a lot of, economic, entities are talking about the U.S. is possibly splitting. Now, this is crazy. All these experts are saying that it's more possible than ever now. It's a greater divide in the country. And, they're talking about, for you guys don't know, America is a capitalist society, but we're not quite full capitalist. Okay. When you take a look at it, let me just grab my pen here. I'm going to draw over this a little bit. So you take a look at the spectrums from, I'm going to put capitalist here, and I'm going to put an S for socialism there. Okay. You have this line here, capitalist, socialism. So the economy is moving towards a spectrum. Okay. So it's not a complete extreme, 100% capitalist, 100% socialism. Is a range. And so we're moving from range to range, basically. Capitalism is more free economy, okay? More free entrepreneurs able to do, what they need to do without government regulation and taxes, which is coercion from the government again. And then you have the socialist spectrum here, where you have complete control of economy, business products, consumer goods, and things like that. Well, excuse me, producer goods from the state, which is the government, central planners. And so basically, as we continue to expand the government, we're moving more towards this spectrum here on the socialist side. Okay. And this will have detrimental, outcomes on America as a whole, as it has done to every other society in history. And this is factual. Okay. Economies grow because of capitalists, and capitalists are basically entrepreneurs. So if you own a business, you are vital. You are the lifeblood for an economy. And if the government comes after you to take to you to redistribute your rewards and things that you did and give it to people who did not do it, that's the redistribution of wealth. It's going to be some major problems. So that's what we're actually starting to see. And if you're, again, if this Biden thing is really on the way, you will see that move in that direction. Now, I don't think that Biden himself is a socialist, but you have the far left that's, riding with him, and he's going to have to make some concessions for him. And so they're going to do what they can to get their agendas pushed. And this will be a direct assault on entrepreneurs. And you got to understand, there's no such thing as equality. Even if you have equal opportunity, no outcome will be equal. Now, they want to make all outcomes equal. Then you have to understand that what is the purpose of trying to excel, to do great? You kill the lifeblood of entrepreneurs, right? And so as a capitalist, you have to understand that inequality itself, the inequality is that you have to actually embrace it, because that's how you actually make your money. I was talking about, I teach these things to my kids. If you want to see capitalism at its best, go to a flea market. Okay. Take your kids to the flea market, let them see. Okay. That is a beautiful exchange, voluntary, no government and telling you what to charge, this, that, and the third. People are just able to exchange freely. That's what you want to have. That's what grows economies. Okay. You have to have the entrepreneurs. Now, when people start to mix moral and all these other things that they believe was right and was wrong, then you start to get muddy, because they then start to exercise the law on these things, but they have not done the economic calculations on how these things will impact the society. So every place in history, there's so many documentaries out there. And I believe that the U.S. public educational system has failed Americans by not teaching, any of us this information. But so many documentaries about socialism and capitalism. Okay. You can see how this stuff is going to end. But you can see these guys are on display debating this. Okay. Now, I don't think anybody on this panel is actually for socialism, to be honest. But some of the things is kind of like a mix. When I was showing you guys the spectrum, they want to mix it. They want to mix some of the socialism, with it. But the outcome will eventually lead to destruction. Okay, so let's just keep that in mind. All right. Now, I'm not going to get too much on that because we got more things to cover. But also, here on the website, Ray Dalio, the granddaddy, right? Granddaddy Dalio. I know I keep some goods around me here. But you guys remember, for years I've been showing you guys about this great body of work. He's been talking about this. I got the physical book. You can actually get it free on his website if you get the downloads. It is a huge volume, maybe a little heavy for some people, but I'm just telling you, these are resources that you guys can have to do your research and everything. He talks about the economic cycles or the debt crisis cycles and things like that. And time over time, consistently, you see these outcomes. He's been, making predictions based off of this. Everything is pretty much going right into what he's been talking about. And so I showed you guys last week about, the father of Austrian economics, Mises Christ himself, Ludwig von Mises. This guy here, him and F.A. Hayek basically discovered the business cycle that Ray Dalio talk about. And these, free markets, economists, got the illest, refutations on socialism and things like that. This guy's battling stuff back in the 20s, early 1900s. But all these guys are telling you, like, you have to have freedom in order for the economy to boom. Now, I was telling you guys this is because with the U.S., the real war is U.S. versus China. Okay. Now, I know a lot of people, it's all about, Trump and Biden or what have you. But I don't know if you saw the real war. Maybe you was blinded by, whatever is happening in the election. But this is the real war. And then Ray Dalio is actually going into length on this. He's been talking about this for quite some time. He has a new book that's keep getting pushed back. I guess it's getting pushed back to January, but you can pre-order it. And he has a great body of work that explains how all these things are basically what's coming down to. And so the issue is that the U.S. as a superpower is declining, and China is basically increasing. Okay. And so there is a conflict. There's a war that is happening. It's a war on all kind of fronts. He always talk about basically what he's seen is always economic wars before they turn into military wars. Okay. Now, so with this whole situation happening, Ray Dalio, he's basically telling you guys what's really taking place. Now, this election, the outcome of this election is going to, help us to pretty much navigate through this future environment of a China superpower, right? Right now, with the whole Make America Great Again campaign, is pro-American nationalist views, and it is putting up strong resistance up against the China, with the China 2025 agenda being the world superpower by 2025. You have much more resistance from a Trump, but with the Biden in place, you have much less resistance against China. But I don't think it'll be all the way. I think he's still going to have to try to put up some kind of fight because, I mean, you just can't just let him, just take over, right? Yeah, I mean, you got to try to do something is what we at least hope. But I think that you will see how this all plays out. But Dalio has the freaking blueprint. Okay. So this is right here on the website. You can check that podcast out. It is what it is. But so China has been rising because they had rejected socialism after the failure of Mao Zedong, who allegedly over 100 million people, from 30 at the low end to 100 million people, died under socialism. Okay. And so, socialism is based, for those that don't know, it's basically the central planners, the government controlling, the raw goods that entrepreneurs use to produce things with. They control the prices and things like that. They basically control their society pretty much, And the problem with that is that they have one person who says, I must make the decisions for everything. If you guys watch, what's it called? Avengers. Okay. Avengers. The guy name is Thanos. Okay. Think about Thanos. Okay. Thanos. If you guys watch Marvel, was it Avengers? Thanos snapped his finger, killed, half of the population. Now, Thanos, it's a really good movie because they really complicate the characters of humans. It's like, is this guy good? Is he evil? Is he bad? What's happening? Right. In his brain, he thinks he's the hero. He said he's seen the future. And if we don't kill half the people, we're all going to die because the resources are scarce. We can't take care of everybody and they're growing so much. So I got to do what nobody else is doing. I'm gonna just kill half of the people. I'm gonna take all this on my own so that society can move on. He's not thinking he's a bad guy. He thinks he's actually doing something good. I think he has the best answer. He thinks it's a moral issue that he's going to take on his own. And so that's what happened with socialism, socialist economies, totalitarianism. These guys had these great ideas of creating a euphoria society that everything would be perfect, everybody would be equal. In China, Mao Zedong, he had universal basic income. He had the health system that Bernie Sanders and all of them want to do right now. China already did all these things, and it failed miserably. Okay, people died by the hundreds of millions because the economy itself. You got to understand economic science, how the economy works. It's not about numbers and math for you guys that don't know. It's about human action, and this is what this guy, Ludwig von Mises, actually basically created this whole. He didn't create it, but he basically, nurtured it. He's like the savior of Austrian economics. They figured that, economics is about human action. Every individual's freedom to make a choice plays into the bigger overall picture. And if you remove every individual's choices and biases, then you kill something that is natural. Okay. So the natural economy gets murdered off. And destruction comes from that when the government tries to make the decision for the greater good. Oh, this is for the greater good, but you can't do that because everybody has different choices and individuals. You have some people that value being rich. You have some people that value heavenly riches. And so, some people can't be bought. There are some people that will lay their life down before they will, sell their soul for anything like that. They'd rather have heavenly riches versus earthly riches. So every individual, what America represents is that freedom. China failed miserably and they wanted to bounce back, and they studied the Western world. They figured out how did the Western world rise, and they discovered it was capitalism. So under Deng Xiaoping, the leader after Mao Zedong, he came in and he built China up on capitalism. So China is communist, but it is capitalism. And then you have America that is also capitalism, but America is moving closer to socialism as you expand government, have more rules, more regulations, and they'll tell you that it's for all kind of environmentals and safety and blah, blah, blah. But the fact remains is that the more government intervention, you kill the economy. And China had figured that out, that, hey, we have to free the economy. So China removed regulations. And so you're looking at the greatest, you're looking at the miracle of the century is China. In 30 years, we've never seen anything like this ever. And that's because China figured it out and they got the blueprint from America. But America did not keep our blueprint. America actually are going towards the socialism, right? And so, and this started with FDR, it started before then. We had the Federal Reserve in 1917. And then the FDR welfare campaigns and all this other stuff. So because you have people that are saying, we got to take care of everybody, this, that, and the third. But in reality, the free market actually can do these things much better than the government can, right? Think about if your DMV was privately owned, you could have the damn Chick-fil-A of DMVs, right? I mean, Chick-fil-A, these guys out here in the damn rain taking your orders. I mean, there's practically no wait. I mean, I don't even mind going to the line when I go to Chick-fil-A. The line's wrapped around the building, but they got it moving so efficiently. This is what private markets do, right? And so they had to compete. They're competing for business. So free market is about competition. Competition drive prices down, and it forces entrepreneurs to actually constantly stay on their feet. You can't just get arrogant because some young buck will come and take your food. But you should be able to have your rewards because of the risk that entrepreneurs put on. Employees don't take on the risk. 80% of businesses fail. Only 20% will succeed. And because you've been able to be successful and to continue to be successful, you have to also bring in other people that's going to help you to be successful. So as an entrepreneur, you're hiring people. The entire system benefits from the rich. This is true. Okay. So if you hurt them, then you hurt economy, and you have to calculate these things out. Now, a lot of people are basically just, putting a lot of numbers on this stuff. And so you got to understand, we also have the Federal Reserve who's pumping up assets. They have an artificial entity that's in the economy that does not belong there. And when they involve themselves, they make the rich richer. So the rich continues to get richer and the poor gets poor because the poor does not own any assets. As we talked about in this blog, poor does not own assets. So when they blow up, and they buy bonds and they buy stocks and they buy real estate. Same thing they did under Obama, right? Who got rich? The richer. Okay. The rich people got richer. The poor did not get richer, basically. And even now, that's the same thing that's going to continue to happen. And so you have that entity as well. But I just wanted to show you guys this is what's happening. China is a more free economy than America as far as and a lot of their economic practices, not in all their practices though. Okay. So this week, I don't know if you guys saw, we was actually looking in the markets. We was looking at Alibaba. Let me actually go here. Alibaba, you guys know Jack Ma. He's, China's the largest billionaire in China. But you saw Alibaba got smacked up, right? So the Chinese companies are actually, they were doing pretty good because of hopes of a Biden victory. It means that you have less attacks coming from Trump. But when you saw, that gap down, like, look up, okay, that came from Ant, which is IPO from Jack Ma. But he was being critical. He was actually speaking, being critical about the government. And so the Chinese government put the clamps on his ass. Okay. They stopped that man from getting his IPO popping. The IPOs, for you guys don't understand what that is. This is where companies go to the stock market to get capital. It's kind of like a giant GoFundMe account. Okay. This is what you could think about the stock market. Companies come to the stock market to raise capital from the world. This is how you get to the next levels. Anyway, China put the brakes on his ass. All right. And you saw Alibaba get smacked up from that. Chinese companies got rocked up from that as well. That was a big story. Okay. So China is still communist. They're capitalists, but they are communists. So they're not capitalist socialism like Mao Zedong. They believe in growing their economy, and that's what they're doing because money is power. You have no money, you have no power. China understands that, and so China has a more open economy. But not all the way. It's not free like America as far as democracy. What they say, that's what goes. You speak out against them, you will pay the consequences. But we're actually moving more into that step, actually, with the technocracy. Technocracy is the technology companies and, these people of power in combination with technology companies controlling society. Okay. So we are seeing that. And so just understand, I want you guys to understand those are the things that's taking place right here. Okay. So, again, you see that story about the volatility. Where was the volatility? I got notifications and everything. Volatility was not there. Markets was good. All right. Let's see. What else do we have here? We also had the ADP numbers that came out. Unemployment numbers, they were actually pretty good. You guys can see pretty steady. 365,000 jobs in October. This is the ADP numbers before we got the job numbers later in the week. Then we had the Feds. So here go the Fed statement. Okay. And again, like I put in here, the Feds, they basically stated that they will continue artificially suppressing interest rates and buying treasury securities and mortgage-backed securities. $120 billion a month. That's 80 billion going towards the treasuries and 40 billion going towards mortgage-backed securities. We take a look at some of the highlighted points that I did in here. Powell basically said that the path of the economy will depend significantly on the course of the virus. The ongoing public health crisis will continue to weigh on economic activity, employment, and inflation in the near term and poses considerable risk to the economic outlook over the medium term. I don't know if that's necessarily true. I know that's the narrative that they want to be true. But as you see, as we open up the economy, things they get better. And you have COVID cases that's rising, but with a freer economy, things are starting to bounce back. We're seeing that things are looking better, but again, it's the whole fear, which is the greater disease than the disease itself. And so you have people that are afraid, and basically they're pushing this whole vaccine thing. You got to understand they're trying to push this vaccine agenda for whatever reason, when we're seeing people without vaccines, there's just walking off the COVID situation. Doctor sent them home for 2 weeks. They come back, they better than ever. A lot of cases, people, being recovering from 1 or 2 days, out just chilling, getting paid. Not doing anything because the company sent them home. So I don't even believe this agenda here. But this is what I just want you guys to see what the Feds are talking about. Again, they said that with inflation running persistently below this longer run goal of 2%, because they got this target goal of 2%, right? The committee will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. They're trying to get inflation to pump up at 2%, actually above 2%. I believe they will cook the economy. Okay. The committee decided to keep the target range for the federal funds rate at 0 to 0.25% and expects it will be appropriate to maintain this target range until labor market conditions have reached levels consistent with committee's assessments of maximum employment. Inflation has risen to 2% and is on track to moderately exceed 2% for some time. All right, so they basically artificially suppressing the interest rates as 0%. Okay. You got to understand the entrepreneurs, risk takers, they rely on interest rates. When the feds do this, they are hurting the economy. All right. In addition, over coming months, the Federal Reserve will increase its holdings of Treasury securities and agency mortgage-backed securities, at least at the current pace, to sustain smooth market functioning and help foster accommodative financial conditions, thereby supporting the flow of credit to households and businesses. This is basically saying that the feds are providing liquidity to markets, liquidity to the markets. Who benefits? Wall Street. Wall Street benefits. Poor people, you do not benefit. So just understand, this is all going to Wall Street. You have no exposure on Wall Street, you can cancel Christmas. All right. So that's basically what that's saying. We got the October job reports here, over 906,000 jobs in the private sector. Here's the labor secretary's words. Let's see if I got that. There we go. The strong economic rebound continues with approximately 900,000 private sector jobs gained back in September and again in October. And the October unemployment rate dropping a full point to 6.9%. Labor force participation increases, and Asian, Black, and Hispanic Americans all saw substantial decreases in unemployment. So that means that, you know, more people were working of, you know, minorities, basically more minorities are working. The unemployment rate for adult women is now lower than for adult men. So if the unemployment rate for adult women is lower than adult men, that means that women are getting the jobs. Do you guys know why women are getting the jobs? That's because these are service jobs. So service jobs, women, they just perform much better doing service. Dudes like to, you know, work with their hands. When those jobs get destroyed, men are negatively impacted. So you have a lot of, you know, service jobs that women are getting. So that's what you see there. As in September, job growth would have been even higher, but for declines in government jobs. Teachers unions take note. School closures are bad, not just for students, but for workers too. Okay, so this is Secretary of Labor. Now, they talk about the government jobs. Now, government jobs don't produce anything, okay? The government created these census jobs. You guys remember those census jobs, over 100,000 census jobs? So what happened here is that those jobs were temporary jobs, and they are now over. So those people got laid off. So those government jobs coming out of the systems. Also, with the school closures, you know, you got, you know, workers that lose their jobs. You have buildings that's not open. You have, you know, people that work those places. Those jobs are, you know, being destroyed by the lockdown efforts. So these are the economic prices that we have to pay. And that's why I said we have to take a look at the cost benefit analysis of this whole COVID situation, you know. You know, you go, I've been out this weekend seeing people just living their life, you know, people are starting to really just not care about it anymore. You know, little kids, they see other kids, they want to play. My daughter, she see the kids in the neighborhood, she want to play, she get excited. It's hard to keep the kids from each other. And watch they punish, they're not dying, right? So, you know, I think that we still have to weigh those things. All right, here we go. Non-farm payroll employment rose by 638,000 in October, and the unemployment rate declined to 6.9%. The U.S. Bureau of Labor Statistics reported today. Okay, let me see if I can open this up. Okay, really, really small letters. All right, so total not, okay, I already just went over that. I'm just going over the highlighted points. Unemployment rates declined among all major worker groups in October. The rate was 6.7% for adult men, 6.5% for adult women. Basically, everybody benefited, okay? Unemployment rate started looking better, but you got to dive deeper into the data. The labor force participation rate increased by 0.3% points to 61.7%. So more people, you know, involved in the getting back into the workforce. Now, you got to understand there's a lot of people that's coming off of, you know, or exhausting their unemployment checks. You know, those unemployment checks that we're getting, the economy still able to, you know, function because of all the stimulus that was pumping out. but a lot of that unemployment is coming out. People are running out of that employment, so it forces them to get back into the labor market. We're seeing that here. The labor market participation started to go back up. Okay, so the number of persons employed part-time for economic reasons increased by 383,000 to 6.7 million in October, at the decline totaling blah, blah, blah. Okay, so it says these individuals who would have preferred full-time employment, okay, these are people that prefer full-time employment. They were working part-time because their hours had been reduced or they were unable to find full-time jobs. So when jobs get destroyed, okay, this impacts the workers. So now you have people that are forced to work part-time. They don't want to, they prefer, but because the hours were cut, they're getting part-time jobs. So this is what it's just telling you here. The number of persons not in the labor force who currently want a job decreased by 539,000 to 6.7 million in October. This measure is 1.7 million higher than in February. So people that actually, they're not in the labor force, but they currently want a job. Okay. Now in red, it says that these individuals were not counted as unemployed because they were not actively looking for work during the last 4 weeks or were unavailable to take a job. So this is data that don't even get captured when they're looking at the unemployment numbers. These are people that don't even get captured in there because they haven't been active in the last 4 weeks or were unavailable, but they're still there. Okay. So again, you're talking about 6.7 million people in the month of October. Among those not in the labor force who currently want a job, here we go, next paragraph. People who currently want a job, the number of persons marginally attached to the labor force at 2 million was about unchanged in October. No changes there. These individuals were not in the labor force. They wanted and were available for work and had looked for a job sometime in the prior 12 months, but had not looked for work in the 4 weeks preceding the survey. So again, you're still talking about people that's still unemployed, massive amounts of people still employed. The number of discouraged workers, right here, discouraged workers, a subset of the marginally attached who believe that no jobs were available for them, was 588,000 in October, essentially unchanged from the previous month. So these are people that are actually discouraged. They're not even looking, okay? These are people that's not even looking. So that's where we are as far as the economy goes. We have been able to rebound somewhat, but we are not at the levels that we were, pre-COVID. Jay Powell, he explained these things himself. If you watch the hearings, anyway, all of this is right here on the website. All right, cool. So let's get back to the charts. Bingo. We talked about the Chinese stocks. Again, how do you play this situation with Biden? Biden is going to be a little more cozy, actually, probably a lot more cozy up with China. But you have Trump, who's been punishing them with these tariffs. You can see those things roll back. Now, understand that Trump punished them with tariffs, but that also costs these companies, on the tariff side, which is a part of Trump's plan to force them to bring the jobs back to America. And with Trump out the way, they're like, yeah, sheesh, get that guy out of here, man. He messing up the money, B. We want to get them things for cheap in China. So you see, the market actually did the opposite of what Trump said it was going to do, because they're looking forward to those tariffs rolling back because they want to keep getting things made in China. They can get it much cheaper. They don't want to hire Americans. I mean, geez, you guys want to make $15 an hour, right? You want to make $15 an hour as a minimum wage? No, sirree. They're not having that. They're going to take them jobs and move them over. See, that's another thing as far as economic science that you guys have to understand, economic calculations. When you have people that are saying, hey, we need higher minimum wage. Well, what's the cost? Nobody asked that. They said, oh, we get a higher minimum wage. But when you set that bar that high, it makes it harder for entrepreneurs to be able to compete. They either just go out of business, or they can't compete, or they go overseas to continue. And then people actually lose jobs. So then you actually have a higher unemployment rate by increasing minimum wage laws. And I just saw what Miami increased, Florida increased. It's supposed to be increasing theirs over like the course of 5 years or what have you. So you'll see how that impacts the landscape down there. But we'll see more of that activity under a Biden administration. These are more socialist geared policies here. Instead of letting the free market price things out, let the free markets price things out. But anyway, taking a look here at let's go to the NASDAQ. All right, so taking a look at the NASDAQ, the futures are actually still up right now. You guys can see, let's switch to yellow. All right, so the futures are actually up right now. We got that nice up arrow here. Futures is leaping up off for the 786, you know, with a 100% retracement right here. Will be at the 12.5. Okay, that's what, we more than likely will see here. Is this come up here and at least tag that. If things continue to be more bullish, then we got basically a $13,000 target on the NASDAQ. This will complete this, again, this whole double bottoms print that we were actually looking at in the market. So the NASDAQ will continue to be strong. Lockdowns, excuse me, these sounds, they're artificially boosting the tech sector, artificially, not natural demand. It's just forced from the lockdowns. So more people that's trying to survive, so they're switching over to this online, to this this technology, the matrix, if you will. The natural world, people can't control that, but the computer world, everything is controlled, everything is documented, everything is tracked and traced. So more companies are gearing more towards that. The tech sector will continue to rise because of that. And yeah, and basically Silicon Valley, you guys got to understand, when I did my data science class about 2 years ago, I learned about all these things before. What was the guy named Andrew Yang, the whole universal basic income thing he was pushing. This is something that Silicon Valley already had. I already knew about that whole plan, and I was like, it's crazy because they had this whole plan. Hey, we gotta pay society like $1,000, $2,000 a month, because we're gonna actually turn these jobs. They're gonna go to the computers, blah blah blah. So anyway, these technology companies will be beneficiaries of this. They're already benefiting from it now, like Zoom. You got them popping up crazy, these companies that's doing online school and stuff like that. So we're going to see a lot of changes faster than we've ever seen in history, I believe, in the next 5 years. By this, this COVID, situation, whether it's a pandemic or whatever, you'll see these, companies continue to rise. The Russell actually looks pretty good. Take a look at the charts here. Look like it's forming a little flag in here. Let me see if I can just boost it up a little bit. We're not too far from our previous highs, with the 1715, but I think that we can possibly get up to the 1700. Got a target up there. You see, this was the floor right there. So that was the time to get back in. Then we got this trigger right here. Okay, we got some resistance right up here at this around 1700 level. But this is going to be interesting because I don't really know if we'll see it because we're up against that resistance. But I do like the setup here on the Russell. Okay, so we actually take a look here at our Russell watch list. You can see what kind of plays, have been coming into fruition from the Russell. Okay, what has the Russell been delivering? Right, we got a nice squeeze that's in there also in the Russell. So we got to see, and I believe that these tech companies are super overvalued too. That's another story. But let's take a look at the list that we got here to the left and just look at these stocks. Right, booming. Right, TTD, boom, UI. Look at those pops right here, right in the Russell. Boom, Square, Chipotle. It's not so exciting there. So you got Zillow. Boom. Who else we got? TMO. Thermo Fisher. So you got some big moves being made in the Russell. Unity Software. This is a pretty cool IPO. It's at a new high as well. Continue to go for it. But I think that the Russell is actually looking pretty good. So that's interesting. Also, don't let me forget about the dollar. Now we talked earlier. We talked earlier about, inflation and things like that. I know a lot of people don't understand these things. People just want free. Everything comes at a cost. Nothing is free. The taxes, the inflation, which is a tax in itself. But as we're seeing here, the dollar is continuing to lose its value. It's continuing to weaken. And it will continue to weaken. Okay, because of the stimulus that is actually going to be passed. We already know the stimulus is going to be passed. We just don't know when, and we don't know the amount. And with, let's just say if Biden, the hypothesis that Biden is going to be the president. Right now, it's looking like the Senate is going to maintain the Senate. You got the House for the Democrats, but the Democrats actually lost seats in the House, which is not good. So you're looking at a divided Congress, more division. This is another reason why people are, these economists are talking about America possibly splitting. Okay, this is crazy. I don't know if that's, going to happen enough. This is just talks that's happening with economists is talking about it right now. Because we're actually just not coming to an agreement on how to run this country. But if you can see, the dollar is continuing to weaken. We got, a sell trigger here, right here. And so I do expect dollar to continue to weaken. Okay. So the dollar is going to continue to weaken. Equities, I believe equities will continue to go up because of that. But even more, I believe that gold is back in position. So gold is back in position. Yeah, we got lots of squeezes starting to fire off and everything. Gold looking beautiful. Same thing, silver as well. And that's what I was saying this whole time. We've been actually watching this whole thing. When they actually roll out the stimulus, okay, which they will roll out the stimulus. We just don't know when. Well, gold has been chopping down here because of the time we get Detroit actually had one, but it never happened. And so gold has been traveling sideways down here on the 100, moving average. Okay, I think it was breaking up a little bit there, you guys. I got a lot of indicators going off. Apologies there. But as you can see, gold held the floor. Gold held the floor. Okay, it came up to 618, come down back to the 618, back to the 100. Then we got a little buy trigger right up in here. And so, the question is, will we see gold, continue its rally from here? I think that gold will rally. And so I think that gold will rally. And when we figure out this whole stimulus situation, gold is going to continue to go even stronger. The dollar will continue to weaken. So gold in play. Let's take a look at silver. As you guys already know, gold and silver, they run lockstep. Silver's poor man's gold. You can't afford gold. Get yourself some silver. Setup is still the same, and it actually looks like a double bottoms, right? All right, hold on a second. Because stream, I got a lot of things is moving, but you can see that kind of a setup there on silver. So still long on silver. We got the silver stocks that's out there. And while I'm taking a look at these, let's take a look at Bitcoin here. Okay. And again, a lot of people that's in the Bitcoin market. I'm not a Bitcoin expert, but we do have a platform here on our website for you crypto lovers out there, the Crypto Gang group. Make sure you join the Crypto Gang group. I'm looking for you guys to get that popping. If that's what you're into, come up here, get it popping, post, make friends. It's free. It's just like, Facebook, except for without the garbage that you get with Facebook. This is our, our place here. So all you got to do is just, get into the Crypto Gang, share your expertise, meet other people who share their expertise and all of that. But that's right here. So anyway, just taking a look at Bitcoin. We caught this nice move and Bitcoin looking good. And this is, again, off this whole Biden's presidency and what have you with technology. And you can see a crazy run up. Now, I got a $17,000 target right here on Bitcoin here. So when we came up right up here, we was chopping sideways, didn't know if we was going to breach that or not. But as you can see, we have breached that. Now, we do have strong overbought territory indicator. So it is overbought. I don't know if we will meet that objective in this run. But that objective has not been met yet. and I believe that we can actually hit that. Okay, this is for the Bitcoin guys out there. This is a hard target, 17,000. But keep in mind, you're in an overbought territory, so you must tread softly. We go back here in the past, we were overbought. You see it went sideways until it bounced down, came back to earth. So typically when people ask, oh, is this a good time to get in? It is pretty much extended. I don't believe that this is a good time for any newcomers to get in. You should have been in back here. You got to get in when it's trading on those floors. And then once it break out, you're making profit. And now you exit up here at the top. You're taking your profits. So anyway, I figure I'll share that with you crypto lovers out there. Let me know how you feel about the analysis. All right, back to us, gang. How much time we got? I'm right here at the end. I'm going to take a couple of names from you guys. So go ahead and drop what you got in the queue. I will say that we did get a nice rally on weed stocks. Okay, weed stocks is, definitely booming back into play. You guys remember weed stocks used to be popping, then they fell off. Weed stocks back into play right now. A lot of states legalizing weed. So I think that weed is back in play. Okay. You got GWPH, ACB, CDC, STZ, Tilray, MJ Cron. All you know, if you need some exposure in weed stocks. Weed stocks are looking good. What you got there, Dustin? You said FUTU? This one you want? FUTU? FUTU Holdings. It's got a squeeze on it. We'll swing from this high to this low. Bingo. All right. Setup actually looks pretty good, Dustin. As you can see, we caught that bounce off the 100. That was perfect. The 618, as we can see, is definitely a zone here because you see the price level kind of snap back a little bit, but we got that buy trigger in here. We got earnings coming up ahead, and we have a buy trigger down here. We got the stochastics pointing up. We got the trend moving up, and we have a squeeze in here. So because we got that squeeze, and although we're up against resistance, I believe that squeeze will push us up for further. Yeah, definitely. I'll take a look at that as well. I actually do take a look at it. I just don't want to have it on my charts here. But I believe that we can actually get up here to that 127.2 extension. Definitely. The 100 retracement is right here, right around $40. So you at least see $40 if this moves up here. Start to take some off the top once you hit that level. And then you can clear the position once you get to $45. So I do like that positively. Okay, so the healthcare sector, okay, that's another Biden stock. XLV, that's a Biden sector benefiting off of a Biden victory. Again, nice like double top situation that we got up in here. Buy trigger that's right here. Buy trigger that's up here. We're not over bought yet, but getting close to that zone. Trend is moving up higher. We had a recent new high. I think that we can get up in here to like a 115. And again, I think that this is going to continue if this whole situation with Biden sticks. If Trump can't flip this, if Biden does, maintain his position, I think that the healthcare companies will move. So that sector, I believe it will move unless Trump can pull a Trump card out under his sleeve. But we'll maintain the hypothesis. Okay. Check. Let's see. So just looking at Chegg here, it is at this bottom, this 100 moving average, which again, that's the floor. Bingo, that's the floor. We can see in the stochastics that, it's turning around a little bit. Okay. Got a little buy trigger here in the oversold territory. So that actually looks pretty good. Haven't seen a reversal here, but this thing, again, just taking a look at what we're looking at here. Give me a second. We're freezing up. So what I would like to do here on this is just go in on an intraday. Bingo. And we're seeing that it's getting caught up in this blunder up here. It's like a blunder up in here. So we're going to intraday chart. We can see the breadth narrowing up in here. And I believe that I would like to see this on an intraday chart. If it breaches, then positive. If it breaches this floor, then it's a no-go. But you are definitely timing some good position entries. Monday, definitely I think we'll get a clear picture on this thing here. We can actually clear up, then bingo, aim to the north side. If it falls up against this resistance that it's in, then scrap the idea. Okay. Because I mean, again, you can get a better entry. The 100 is definitely a good, floor. So if you see it fall down to the 100, then you will re-aim and fire to that positive hypothesis. RVLV, Revolve Group. Okay. And this is actually looking almost like a little head and shoulders pop off. But let's take a look at the intraday. Same thing here. I'll play this off the intraday. If the price got up here above zone, come on, get my levels. All right, if we can hold above this level, aim north. If you fall, scratch the idea for the time being, let it recalibrate. But again, I play it off the intraday. Chart looks actually pretty good. It is in a struggling position. It hasn't crossed up yet, but it can. It is an earnings play, so keep that in mind. Earnings is up this week, so you definitely want to try to make your position by tomorrow. Okay. Other than that, what else do you guys have for me? Anything else? Ron says IAC. Okay, I'll take a look at that, Ron. All right. Bingo. IAC. That actually looks good. We'll take the previous high to the low. It's right up here against this first target. Second target at 154. Squeeze is still intact, hasn't fired off yet. Question is, can it keep its juice popping, right? With that squeeze in there, I'll be betting long unless you see anything otherwise tomorrow. Okay. We do have some earnings coming out this week. Let me take a look. We got Beyond Meat, we got Canopy Growth, we got Aurora Cannabis. So we got some weed stocks that's going to be having earnings this week. We got McDonald's, we got Nikola. Also keep in mind those electric vehicle stocks, they will benefit greatly under Biden. So also keep in mind, you may want to pick some of those shares up. What else we got? This is on Monday. What else we got? Tuesday, we got Lyft. We have Adidas. Let's see. In fact, we had the situation with Lyft and Uber that has some good regulations that went in their favor. So investors are feeling much better about Uber and Lyft. Okay, so that's something to keep in mind as well. What's up? Wednesday, we have who we got? I don't think we got anybody really popping. There is a 24-hour singles day shopping extravaganza for Alibaba. So Alibaba may get a nice bounce back. I'm pretty much long China. So understand, because of this whole situation, I told you earlier about the whole China having a freer market than America. And a lot of Wall Street guys, a lot of big dogs, Ray Dalio, Jim Rogers, you name it. These guys are over in China on business because that's where the capitalist is going. Less regulations, we can actually operate without all the bureaucrat. And so definitely look at the EEM. Okay, that's the sector for, emerging markets. So I think that those would be much better plays. You can get some Chinese exposure over there. I'll just pull it up for you guys real quick. Okay. I think that these are actually going to look really good. So, and you see it's continuing to climb. Okay. Continue to climb. All right. That's the EEM, emerging market. So get some exposure in that because, America is declining and China, I don't think, again, if Biden wins, there's not going to be any resistance from China and China's funding a lot of those organizations like the WHO, and you got all these other trade things, and China is big dog over there. So China's going to be in our lunch. And if you want to be a capitalist, gotta tell you. So a lot of these going through Chinese companies go over to protect, the wealth. Okay, your wealth is in dollars. You want to get that wealth out of dollars, put it into something else that's going to make some money for you. All right, or at least preserve the wealth that you do have. So anyway, I think that's all going to be interesting. With that being said, I don't think there's anything else. I think we talk about the bond market is going to be closed on Veterans Day. So Wednesday, Veterans Day, bond market is going to be closed. Keep that in mind. It looks like equities markets are still going to be open. Thursday, we have the BLS reports on consumer price index. So we get the CPI numbers about inflation. We have earnings from Walt Disney, Applied Materials. Who else? Palantir, Tencent Holdings, another Chinese company there. And then Friday, we have what do we got? Consumer index sentiment. BLS releases the PPI numbers. And that's it for the week. All right. So with that being said, I want to thank you guys for having me. And hey, we'll catch up in the markets this week. You guys already know it's going down at wallstreetjapboys.com right here in the chat room. Make sure you register if you haven't already. All right, gang. Y'all have a good night. Peace.